Hey everyone, John Henry here, Slingshot Futures Trading Group. Thanks for joining me in today's video. Before we start, take a second to subscribe to the channel, give the video a like, and make sure to click the notification bell icon so you don't miss our next live stream right here on YouTube every afternoon at 15:30 Eastern Time. Also, don't forget your free morning brief waiting for you on ssftg.com/brief. That way, you can be sure that you're loaded up with all the major levels of interest for the day, as well as, of course, some charts to get you going on the right foot. Are you looking to get filled in ahead of time with some video game plan action every morning, every week, every month? Then you can take a look at the join button below the video to gain access to our SSFTG briefings and live analysis rooms during the morning sessions. All right. The topic for today, outside gaps and how they impact the markets. So starting off today, we've got this relatively large outside gap to the upside. And the outside gap by itself isn't anything crazy. And just so we're on the same page, so you know what I'm talking about, an outside gap up is where you have the previous day's price action and the market is gapping completely outside of it, right? The high and the low of the previous day, the market's way up here, it opened here. That is an outside gap up in this case. If it were opening down here, it would be a gap down. So when we have that kind of movement, there are a few things to consider. First off, are we gapping to an objective? Are we completing an objective with this gap? Are they finishing something off? Or are we gapping near an objective? Or even sometimes more interesting, are we gapping above an objective, right? That might kick in a little bit of the greed side of things. So these outside gaps can give us a lot of information depending on how the market wants to move. But as always, before we get into those, we got to zoom out and kind of get the general context. What's going on in the market? And the overall move from the upside is a little bit more kind of wedge-ish. We've got a nice wedge kind of forming. It's a little bit shallow. Can't even draw it right. There we go. To the downside. And that might end up being a little bit of a channel. Okay, well, there's clue number one. We're gapping way above that possible channel. Okay, well, if we look backward a little bit here, is there any structure, anything that we can work with? There was a previous wedge over here that the market kind of broke out of, and it looks like it was a flat bottom. And, okay, well, we're gapping over that as well. So we're gapping over a lot of areas of interest that sellers would have initially been looking to defend. In fact, it looks like they might have tried defending it. And that's where it gets even better, because knowing that the volume came in to defend there and now we're gapping higher, well, guess what? When you have a gap, it doesn't matter if you had your stop at 35.94.75, you got filled up at 36.11 because that's where the market was trading. So a lot of people are going to get slammed out of their trades, and if they're longs, they're going to be taking profit. It's a big gap to the upside, but we're not at a major turning point. We're not at a level of interest quite yet. It needs to go just a little bit further up to kind of get to those zones of interest. And if anything, we're gapping above everything, adding a huge amount of bullish sentiment. So the first bear bar is a really strong bear bar to the downside, but given the context, it's going to be difficult for sellers to want to come in underneath this. If they are going to come in underneath it, it's going to have to go fast or they're going to lose interest quickly. And if it doesn't go underneath it and it starts reversing back up, that might be a sign that the buyers are trying to push back up towards the highs. And we get a bull bar. It never triggered in the bear bar. That's a big clue. And the bull bar did go above the bear bar. So technically they triggered in longs. I don't know about you. I'm not really a big fan of buying above a big giant bear bar like that. And I don't think many other people were either. If anything, it looks like sellers were looking to fade the high, given that it faded right back down and closed almost at its halfway point. So we're in a little bit of a balance here. The volume is still decreasing from the open, but not a whole lot is going on yet. And then we go into the third candle of the day, totally balanced. Inside bear bar, right inside the first couple candles, nothing happening. The volume's the lowest it's been all day, although it's only been 15 minutes. That is giving us a clue that the market's finding a balance. They're finding a pause. Nobody's willing to do anything here, or, well, there'd be volume. The one nice thing is that falling movement is coming with extremely low volume. So it doesn't seem as though anybody's really interested in doing anything with downward movement. So that could be a clue to the upside, but it's still really early to tell. Got a nice strong bull bar back to the upside, but realistically, it's all still inside that one bigger bull bar. It hasn't moved outside of this. So as long as we're still stuck inside here, nobody really wants to do anything. And even though this bull bar is closing so strong, we can see that in the volume. Look how low the volume is. Nobody's doing anything. There's nothing really to do in this situation, but wait, we've got to see what's going to happen. Do the buyers take it? Do they break out higher? Or do we start finding some of that resistance and push down? Who's going to start winning the fight here? There isn't a clear winner yet. And if anything, we haven't hit anything in terms of support or resistance to allow these traders to jump on board. So it's kind of a waiting game still. Okay, big giant bear bar to the downside, and with that huge bear bar lower, there's a couple things that stand out. First off, this is the biggest candle that the day has seen. Now, the biggest candle of the day coming in, on bar 5, okay, that's a little bit late. Typically, the biggest candle of the day in the morning is bar 1, bar 2, the first couple, because that's when the biggest amount of volatility is coming in, not bar 5. We're now potentially establishing a range, and this is the first time that they've broken lower. Big prices down, big volume. Right? So that would indicate that if there were shorts in there, they're starting to exit as partial profit taking at the very least, probably at the lows. And if we go even further than that, buyers, assuming that this is a gap up and a potential continuation move, they're buying below those candles, trying to get it to go higher. So this low, big bear bar coming in with heavy volume is a potential indication that buyers might be trying to step in, but it depends on how they follow through. If the follow through is bad, if there's no bullishness after this, then they could be looking to step a little bit further back towards the moving averages. Nice bull bar to the upside. Volume's relatively weak, which is a good sign. Upward movement, less volume. That means that nobody's selling yet. That's a good thing if you're looking to go long. That would show that there's potential room to keep going to the upside. And likely, if anything, if buyers are looking to go back up, it would be the buyers who got stuck above here, right? Realistically, if anybody is going to be getting out or doing anything, it's going to be the people who got trapped at the highs. And they're going to be the ones that are going to be looking to jump ship if it starts going up. Nice bull bar, very strong bullish inclination, and the volume is backing up every reason in the world for buyers to want to be coming in here. So likely it's going to see more continuation up. And we can also break this down from a twin reversal standpoint, where the market attempted to break out below the lows and then immediately failed. So whenever you have a situation like that, a lot of times the market will want to come back and treat that as a level of support. Right? We broke above it, once resistance, now support. You'll get one of those little breakout pullback kind of moves to retest that area. So buyers on the small little pullback would make sense as well. That's all they got, was a small little pullback, and that's all there really was a small little bull bar. This big giant bear bar to the downside, if shorts were looking to sell underneath this and they see this big giant heavy bear bar, they're thinking awesome, right? They're really pumped about it. And then they get this bull bar back up closing on its highs. That takes away a little bit, but hey, maybe it's an inside bar. We'll hang out a little bit longer. And then it follows up with another bull bar. Now the bear bar, the engulfing traders are basically back at break even. You can feel them kind of losing a little bit of faith in the trade. They want to see it go back down again. Maybe entry defense sellers will be looking to sell back at the engulfing entry point. We're hovering right around that area. So it makes sense to see some selling pressure kick back in here, falling resistance coming across the highs as well. There's a couple reasons for the sellers to want to keep trying. We haven't gotten back to the moving average yet. So as far as a reversion to the mean goes, well, that hasn't occurred yet either. So this is a very strong bullish move to the upside, but you can still see the sellers aren't necessarily done yet. Another bull bar to the upside, and now we're starting to pressure into that engulfing area. We closed above it, so the sellers are going to need to see this to go back down. Remember, the shorts who are selling it went up and then went down underneath it. They enter short where it goes engulfing. We just closed back above their break-even point after already being down several points into the profit. Now it's back again. They're not going to be too happy about that. And if the market starts sliding back down and they start showing some support, like exiting, right? Scalping out, taking a point, taking a tick, taking 2 ticks, whatever the market will give them. If it pulls back, then we're likely going to see further upward continuation. And with the string of 3 very nice bull bars back to back, I would assume that basically every pullback at this point is going to get bought up. So buying below these previous bull bars, buying that previous inside low as a retest, all of those areas become hot spots for buyers to come in. We're still seeing continuation to the upside, and volume is the lowest it's been all day. Nobody's looking to do anything in here yet, which from a buyer's standpoint is actually a good thing. Nobody's selling. So we can at least look for a more continuation higher. We get a nice little bear bar, and this is where the big clue comes in. We get this wick to the downside, and the bear bar closes pretty poorly, right? It's not the best bear bar in the world, but where did it go back to? It went right back towards that entry point of the bar one sellers selling right around the open. It hit their break evens. We also came back and retested the breakout pullback zone from that twin reversal. That's a reconfirmation below some previous bull bars, and it's closing very weak. Oh, plus, remember what we were just talking about with all the volume when we've got outside gaps up? Lots of buyers are looking to come in on this movement and really rally this market higher. What did we see with this bear bar when it went down? Volume increased, right? We saw an increase in volume that would suggest that buyers were buying the pullback and looking for a continuation. If they can crack above this bear bar's high, it's going to be pretty tough for the sellers to fight back against this. More bullishness to the upside, and notice the lack of volume again. It's breaking higher, but nobody's taking profit. Nobody's getting out of the way yet. Everybody's looking for that pop back up towards the highs. We've got the opening gap to the upside, massive outside gap higher. The sellers are losing very quickly, and, well, everybody's looking for another high. Possible breakout, maybe buyers looking to buy low again if they haven't already gotten in. Sellers are obviously stuck, so any pullback now is just for them hoping to get out of break even now. And it went just underneath that previous bull bar and then shot straight up to the highs. Now what do we see? Big volume coming in. Huge bull bar all the way up to the top. Now everybody's starting to take profit, right? And it makes sense. It's still not the biggest volume in the world. It's the third largest volume, well, I guess fourth largest volume if you consider the first two, throughout the course of the day up to this point. So there isn't necessarily a reason to, not expect a pullback here, but at the same time, we just failed below the lows. We just had that twin reversal. We know sellers are under pressure, and a double trap rotating higher, I mean, it still looks pretty good. There's obvious profit taking here, and depending on how many contracts long people will have, it's obvious they're going to take something off here. So you expect a little bit of a pullback, but I want to really see what the follow through is, and how aggressively they continue higher or don't continue higher. Okay, weak bull bar doesn't really do much, and we can see the volume is very low again. It only made a one-tick new high. Nobody's really going to be looking to take profit into a one-tick new high. A lot of folks are going to be looking for a little bit further up. We've got the potential for maybe some measured moves in here. That objective might be coming to completion up around this area. Maybe we're looking for a full deviation move, right? Where you go from the bottom to the top of this bear bar, knowing that it failed. Could be looking for that to roll all the way back up to the highs. One thing's for sure, though, we are just coming into the highs, and this would be the first major objective, and it's not pulling back yet. We're not seeing volume coming into the highs, so there's nothing saying that the pullback is ready yet. And the last time they took profit, we're seeing it go higher. So obviously there's some pretty strong bullishness here. We get more continuation to the upside, a little bit more volume, but notice this candle's got a lot more wick. That might be buyers buying into the pullback. That might be buyers buying into the high. And we can go in a little bit further, and we can narrow in what that might be by using the order flow volume profile tool. And we can zoom in and see what was that volume, right? Oh, actually, that lets me cheat a little bit. Okay, so I can't do that. Let me go back to that. And we can see the majority of the volume, where did it come in at? It came in at the pullback and at basically the close of that bull bar. So really good attempt at continuation to the upside, and buyers are obviously buying the pullback. We're seeing volume increase. And where did it increase? Well, it increased on the low side of the candle. We're seeing some clues that buyers are still trying to get it going. Now we get a bear bar. Nobody really did anything. Nobody's buying it. Nobody's selling it. We've got a balance. We're hovering still on that 36.16. The market's not really going up, not really going down. A lot of people obviously took profit on that big bull spike higher, but now it's just hovering and nobody's really doing anything. We get a little more continuation to the upside, and now we can see the nervousness of these buyers setting in. because the market made a one-tick new high and volume jumped up. That's a clue that the buyers might be getting a little bit skittish. Like, I mean, this thing isn't moving. Let's just take it off at the highs and we'll see what happens next. And then it pulls back again, right? So we get that pullback and it's on low volume. Now, that's a problem because it pulled back. It's a bear bar, but nobody bought it. And that's a little bit concerning. So when the market goes back up to the high, you better believe that we're probably going to see more profit taking again. We get a bull bar back up, but it does not make a new high. This is the third time that it's hit this high and hasn't broken through the top yet. And not many traders are going to be hanging around to see if it breaks below this bull bar anymore, especially not after that low volume little wick down. So stops, if the longs are in, are going to be underneath this bull bar. And buyers, it's super, super aggressive, but maybe they try to buy a breakout on the highs. Not a trade that I would look for, but it's a possibility, I guess. I like buying the pullbacks personally. And then we've got the big breakout to the upside. And what do we see? We've got the big breakout and big volume coming in. More people taking some profit going into the 11 o'clock hour with the European session coming in. And then we go into the end of the day, which doesn't look like much has happened. It's kind of pulled back a little bit. But overall, really interesting to see this outside gapping taking charge of what's going on in this market. And when you have such a strong outside gap to the upside, the one big thing that we've got to be looking for, are we opening up in a major objective, or are we opening up away from an objective, or maybe way beyond an objective? In this case, if we look back, we can see what the market finally found, right? They finally found an objective, a previous major swing, and now the market's starting to transition into, well, more likely than anything, a range. If the market does start going down, we've got a lot more structure to work with, right? We've got these lows, we've got the high, the unfilled gap, we've got major structure, but if it starts going back up again, all we really have are these highs and that swing and then that. And that's about it. So it becomes a little bit more difficult if it wants to keep going higher here. But all things considered, very interesting strength coming into the top and a lot of big clues coming in from not just the outside gapping, but also the volume. So that's going to do it for today. Like we always say, make sure to stay safe out there. These markets are crazy. Keep those stops in play and let those winners run. Until the next one, I hope you have a great trading day, and we will see you in the live room. Otherwise, we'll see you all tomorrow. Thanks.